Good morning, ladies and gentlemen, and thank you for taking the time this morning to attend Keypoint's Tax Matters Special Edition webinar on e-invoicing in Saudi Arabia. For those of you who have attended our Tax Matters webinars before, you'll note that we gather to discuss some of the most topical and impactful issues in tax, generally across a range of topics, but today we are just looking solely at the introduction of e-invoicing in Saudi Arabia, given the magnitude of the change and the impact that it's expected to have on businesses. So for those of you who have attended the seminars before, you may notice there is a different voice this morning on the panel of presenters. My name is George Campbell, and I recently rejoined Keypoint as the head of tax. I was a founder member of the tax practice of Keypoint back in 2017 when we were helping clients to deal with the introduction and implementation of VAT in Saudi Arabia, along with some of the team that you see here in front of you. So very pleased to be back, delighted to be back in the capacity of tax practice leader, especially at this time in Saudi Arabia and the wider GCC region, when tax reform is high on the agenda, obviously driven by global initiatives to make tax more prevalent and to introduce tax to the region in what appears to be a quickly phased manner. So I'm joined by Shrikant Raghunathan. He is a senior director and head of our IT consulting practice. And as I run through this morning's webinar, I will bring Shrikant in to talk about some of the technology aspects of e-invoicing, because this isn't a tax issue exclusively. It's not a technology issue exclusively. Actually, the two go very hand in hand. And as you'll see from the presentation as we go through, the impacts are both quite heavy on the IT and tax side. Firstly, in relation to what you're going to have to do to amend your systems in time, and also ahead of certainly January 2023, but in the run-up also, the tax data that you're going to have to provide to the ZACA, which is the new name for Gaza after its amalgamation with the Customs Authority, is going to be, you will need to be very sure that that can be scrutinized, and you're happy to send that data to the tax authority. So large scale impacts on both tax and IT. We're also joined by Tariq Haq, who's a senior member of our VAT team. And Tariq, as I'll bring him in later into the presentation, Tariq actually has worked for a tax authority. He worked for HMRC in the UK. So we have not only tax, IT, and VAT with Tariq, we also have insight into the inner workings of a large global tax authority that has dealt with e-invoicing, albeit in a different manner. So I guess on top of everyone's agenda and the first question, why are we bringing e-invoicing now? And obviously the as I said earlier at the start, the pace of change in tax in the region, particularly around VAT, but just generally is very rapid, and significant changes are coming. And obviously globally, tax authorities are looking at digital initiatives to automate the tax process, VAT, invoicing, returns, real-time data. So it's no surprise that, you know, a tax authority as progressive as the ZACA, and one that has really built its capacity and capability recently, is now looking to introduce e-invoicing to automate something that I have noted from my time in working in Saudi Arabia, and I've been in the region for about 5 years, something that has caused a lot of issues for business, particularly on the purchase side and reclaiming input tax, has been the consistency of or the inconsistency of documentation. and the gaps that may exist in data that invalidate those documents and therefore potentially invalidate input tax claims. So this initiative, if all goes to plan, should hopefully deal with some of those aspects. But I think, from looking at it and placing myself in the tax authority's shoes, obviously, ZACA is very keen to increase tax compliance. You will have seen that from the level of audit and the number of requests for information that you as businesses will have seen. They come in thick and fast, and generally with a very short turnaround time. So ZACA is very, very keen to make sure that taxpayers comply. Tax receipts are an important part of budget as well. So this is all partly designed to accommodate some of those requirements, but also to streamline the process of VAT exchange of documentation. And as I mentioned, it will assist taxpayers, as long as documents are compliant and these regulations are adhered to, in getting their claims for input tax. I would suspect with more ease, but we can talk about some of that as the presentation continues. I think one of the major issues, and obviously it's related to tax compliance, but is really of e-invoicing, is to limit shadow economy, is to make sure again that the tax authority gets all of the VAT that it's entitled to, that taxpayers pay the right tax at the right time. So to limit that shadow economy, the cash economy where documents are potentially not exchanged. You can never eradicate that completely, but it will certainly go some way to limiting that, reducing tax evasion and fraud by putting in place what will be quite a rigid system. Obviously there are, and as I'll come on to, a couple of deadlines for generation of e-invoices versus integration, which is the time at which the tax authority is going to have real-time access to your data. But that's going to be a fairly impactful part of the e-invoicing process, and we'll cover what that potentially means for you as you approach the relevant deadlines. I think it's a good point to make, and I'll make it a number of times, that 2023 might seem like a long way away, but it's little over 18 months away from now. Effectively, it is the end of 2022. So really, and I'm sure many of you know this from going through VAT implementation, and we certainly do, that these things, to do them properly, takes time. And obviously with a system as rigid, if we can use that word, as the system of e-invoicing that will be introduced, to introduce this uniformity in documentation, really needs to be considered carefully, and time needs to be taken to make sure that it's done correctly. Just a point before I do go on, we do want this to be an interactive session, because there are a large amount of questions on this topic. We will do our very best to answer them, given the expertise that we do have on this call from IT and tax authority, and from VAT implementation. So please use the Q&A widget to ask questions, and at the end we'll allocate roughly 15 to 20 minutes to answer the questions that you do have, because in every discussion that we've had on this matter, some fantastic questions have come up, and I think they would be useful to everyone on this webinar. So I think one of the biggest surprises, certainly from my perspective as an advisor, and I think it's shared by the people on this call and the panelists, the breadth of the coverage of the implementation of VAT was a surprise. And obviously there was a limitation in the first instance on the registration threshold, which was then phased out after a year back down to $100,000. But it brings so many businesses within the scope of VAT, within the ambit of that, to be registered, to account to the tax authorities. 375,000 SAR on an annual basis, turnover-wise, catches many businesses. And I think it was a surprise. I say, you know, obviously given the concession, the initial concession of 1 million SAR registration threshold, the reversion to 375,000 was a surprise to many, that just so many small to medium-sized businesses would also be caught in the first phase of VAT implementation. And that coverage has been extended to e-invoicing. All resident taxpayers in Saudi Arabia are covered by the requirement to issue and generate and store e-invoices, which is will be hugely burdensome to some businesses, particularly those who don't have a dedicated IT function or indeed systems at the moment capable of generating and storing e-invoices at all, never mind exchanging them in real time with SATCA systems. So the coverage of this is absolutely massive, and it also extends to any third parties that you use to generate your invoices, if indeed you do, or to your customers who are perhaps adopting self-billing, so they're generating your invoices on their behalf. That the coverage of this is enormous. Now, when we look at who is not subject to e-invoicing regulations, you know, that would cover non-resident taxable persons. So there are businesses that do business in Saudi Arabia. They make supplies which are subject to VAT. They may be digital service providers or those supplying goods in country to individuals. They're non-resident. They still fall within the coverage of VAT, but they are not required and not subject to the e-invoicing regulations. So I have had a number of multinational clients who have been pleased that they're not covered within these regulations, but almost everyone else is. And we can come on to some of the supplies which are covered under this as well, to start to give you an idea, if you've not already been assessing the impact of this, the areas of your business that will be covered. If you're not registered for VAT, you obviously don't fall within the coverage of the e-invoicing regulations, but it is a very important point for maybe businesses in startup mode, or for a new company that you might be setting up, SPVs, any sort of corporate wrapper. If it's going to come within the scope of VAT, if it's going to be VAT registered, you also need to consider e-invoicing. So you all of a sudden go from being not covered by either to being covered by both. And the latter, the e-invoicing, could be significantly onerous, particularly for businesses at an early stage. So those are the persons that are covered. It is almost everyone. It is probably the majority or almost exclusively everyone on this call. But the transactions that are covered are also quite extensive. Now, all of your taxable supplies, 0 rated, standard rated at 15%, your exports of goods or services, any intra-GCC supplies, at the moment, those are just treated like normal imports and exports, because we don't have an integrated system of GCC VAT yet, but that will come, and that will need to be dealt with along with or in the context of e-invoicing. Any nominal supplies, so deemed supplies, things that you give away for free above certain thresholds to maybe your staff, or that you give away to your suppliers or customers, you will have to issue e-invoices for them, despite the fact that you're not receiving any consideration. That's not something that's new. We've had to deal with that from a VAT perspective, knowing that even on nominal supplies where you don't pay any VAT, you don't issue any invoices. You still need to issue an invoice. And invoices, any advance payments that you receive for taxable supplies, you will also need to issue an e-invoice for. So again, following the normal tax point rules, but it's just an important point to note that you will have to issue an e-invoice for the receipt of those payments, which do trigger a tax point. Now, what's excluded? It's not much, exempt supplies and advances received for those exempt supplies. Supplies subject to VAT under the reverse charge mechanism. So where you buy something from abroad, at the moment, you're required to treat it as though you supplied it to yourself, but you don't issue a tax invoice for it, nor would you issue an e-invoice for that transaction. And imports of goods into Saudi Arabia, again, that's dealt with through the payment of VAT to customs and the recovery of that VAT through your VAT return. So again, no e-invoice required for that. But I think if we just sit back and draw breath just on the scope of e-invoicing, again, I say that exclusively on this call, you know, we will be significantly impacted by this. Resident taxpayers for most supplies. So an enormous coverage of e-invoicing. So this is where we get on to the really interesting stuff in terms of what are the deadlines, what are we going to have to do, and when are we going to have to do it by. Now, this system of e-invoicing is probably the most, let's call it comprehensive globally. It's called a clearance model of e-invoicing, where effectively tax invoices are cleared in real time through a tax authority system. That's the end state. That's where ZATCA wants you to be and where you're going to have to be by the end of 2022. Now, that's very different from other global models of e-invoicing. For example, a post-audit system where you issue electronic invoices. There may be regulations around how you do that, but the invoices are not audited until the tax authority comes to visit you. And then we have other systems that maybe, for example, are batched and the invoices are sent to the tax authority on a periodic basis. We are looking at real-time clearance. And I think at this point, I might just ask Tariq, as I mentioned, Tariq has worked with a tax authority. You know, Tariq, how different is this real-time clearance model to what you saw in your experience in the UK, and do you think it's part of a larger global agenda?
Thanks, George, and good morning all. Just a quick point to start with, George, I was surprised to see that e-invoicing is not going to be rolled out in a sort of staggered manner, as was the case with that implementation in 2018, with bigger businesses taking the lead. But coming back to your question, in my view, e-invoicing is several steps ahead of what other tax jurisdictions do throughout the world, even mature tax jurisdictions. So essentially, with the way KSA is taking an approach, it will be a real-time clearance model that happens, and the now is looked at now, rather than someone coming in after a few months or after a few years and then auditing your records on a sort of historic basis. So just as an example, UK VAT's been around, I think 48 years, 1973 is when it was implemented there. And it's currently transitioning into sort of making tax digital. And even with that, taxpayers are only required to sort of report their figures more regularly. But with e-invoicing, like I said, is several steps ahead of that. And once integration phase 2 kicks in, everything will be happening in real time. And so, you know, if the processes, controls of companies are not sufficient, they'll probably have lots of issues going forward. For example, there may be an abnormally high number of sort of reversals or adjustments. And then so when the tax authority compares that to other companies in the same industry, they may, you know, that may trigger tax audits. And also I want to mention about the speed of the change here. It's interesting how quick KSA implements things. And for example, in the UK, preparations for making tax digital have been going on for the last many years. But with KSA, I mean, it's changed within a year, and, you know, things move really quickly. And so businesses don't always get a chance to make all the relevant considerations, so many of which are important. And what happens in sort of practice is that businesses tend to just focus on a specific element. So for example, e-invoicing, they'll probably focus on IT systems and not give enough attention to sort of other important aspects. For example, tax data quality, appropriate controls, making sure the system is being fed with the right data, etc. And I know this happened with that implementation in KSA 2, January 2018, when it started. Lots of businesses got things wrong at the start. And over the last few years, I've seen lots of VAT assessments coming through, businesses being penalized. I guess those issues probably had a better chance of being avoided if that implementation was done sort of more thoroughly. And maybe not just looking at the VAT implementation, IT side, documentation side, there's so many perspectives to think about. So yeah, that's just my initial thoughts on that, Joe. Back over to you.
Yeah, that's really helpful, Tarek. It's very interesting to hear from, let's call you a former tax inspector, on just how wide-reaching or deep this is going to reach into organizations. It's not an unfamiliar model of e-invoicing. It's relatively new. Obviously, the technology has had to keep up or keep pace with the requirement of the tax authorities. So it's needed to be there in the first instance to have for example, a real-time clearance system of e-invoicing. It's quite popular in, for example, Latin America, Mexico. If we look at Europe, the Italians have a clearance model of e-invoicing, and the feedback from them is that it's very painful. This is a painful process, and it's not something to be. I think it's good that the ZACA has given a long lead in to 2023. I can tell how seriously they are taking it with the amount of support that they are giving to taxpayers. I think they have adhered to their deadlines on the publication of regulations, resolutions, etc. They had given themselves 6 months from the 4th of December 2020 when they first announced the regulation to publish the final resolution. They've done that. They did that on the 28th of May of this year, so they were ahead of the deadline. They're holding awareness sessions for tax for businesses and for solutions providers alike. So they're really serious about this. Now, the one piece of feedback from the Americas, Italy, this was painful, but they really like it once it's implemented, because certainly from a documentation perspective, yes, it gives the tax authority access to real-time data, but it does give that nice consistency that means that you can, once this is all up and running, be a bit more sure about your VAT recovery process, for example, because not only will you be clearing your invoices in real time for your supplies, but you'll also have to do the same as customers. So that's an important point when you receive an invoice from your supplier. It should have already been verified by the ZACA. When you send it back through ZACA, they should say, yes, we recognize this invoice, and yes, you can have your input tax recovery claim subject to the normal rules. So it could work very well in businesses' favor. I mean, if we look at where we are today, on the 14th of June, we've got just under 6 months to meet the first deadline. We'll have implementation in 2 phases, which I'll come on to in a bit more detail. But from the 4th of December, the generation phase will start. You must generate, issue, and store invoices. There isn't a prescribed format for that. It can be as long as the invoice is generated by a billing system or by your ERP, and has certain controls in place, which again I'll come on to. It will meet the requirement. But from January 2023, or the end of 2022, if you want to look at it slightly more realistically, then you have the integration phase where you're going to be required to send documents to the ZACA in the required format, which again we'll come on to in the coming slides. So what's staring us in the face right now is 4th of December 2021. I'll come on a bit in a short while to why we shouldn't just solely focus on 4th of December 2021. I mean, I know there will be those of us attending this webinar who are thinking, I really need to comply with this. I really need to focus on the 4th of December 2021. Yes, that is absolutely correct. But if we focus on the 4th of December 2021, it leaves us just over a year to get ready for an integration phase, which will be hugely technically complex and demanding. But if we do just look at the initial requirement, yes, the generation of electronic invoices for full and simplified tax invoices and for credit and debit notes from the 4th of December 2021. 2021. Now, that will have to contain, or those invoices, in addition to being generated, system generated or generated by a billing system, will have to contain all of the mandatory fields in Article 53 of the regulations. Now, that's nothing new. We've needed to comply with that, with all of those data points being there in Arabic. But it is a reminder, and this will all have to be system programmed. I think it's a great time to look at your system, your tax data, and to make sure that your invoices are being generated in the required manner, because obviously there are, and there have been for the last three and a half years, administrative penalties for the issue of incorrect invoices, and that will continue to be the case. But I think, aside from compliance with the invoicing rules, aside from being generated by a system, and obviously being able to be stored and locally archived offline, there are some interesting technical aspects on the 4th of December that will have to be considered for e-invoicing. One is for simplified invoices, you're going to have to generate a QR code. So your system is going to need to be able to do that. So for those of you who are making B2C supplies or low value supplies, you'll need to be able to generate a QR code, or if you are generating simplified invoices. And also there's an interesting point to be made on tamper proofing. Currently, many businesses have systems which aren't entirely tamper proof. You will need to be able to monitor user sessions. You will, there's a prohibition of being able to access from a default username, or with or to access the billing or invoice generation system anonymously. So there are going to have to be processes and controls in place for the 4th of December 2021. And again, it's a great time, especially in the run up to 2023, to look at your tax data, because ultimately in just under 18 months time, you will be sharing all of this with the tax authority. So is that data accurate? Is it correct? Is the tax mapping and the way you apply VAT, is that correct? Because the ZACA is going to be able to see it soon. Are your data gathering processes sufficient to make sure that in the first instance you get all of the data that you require? These are questions that you do need to start asking, even for the 4th of December 2021 deadline. And then there's 2023. Now, once I've finished kind of going through this, I'd like to hand over briefly to Shrikant Ranganathan to kind of talk through some of the technical aspects of this, because this is very technically heavy. It's a big jump from the 4th of December, and that's why as a business, as an advisor, we're telling our clients, okay, yes, focus on the requirements and the deadlines, but please consider this together as one project towards 1st of January 2023, or as I say, the end of 2022, with the 4th of December being nothing more than a milestone, and certain things need to be achieved by that date. Because from 2023, your system, in addition to being able to generate these e-invoices, will have to do it in XML. Gazette will have to give a schema as to how that is to be fed into their system, but XML generation is a requirement. You'll have to generate a unique ID for each e-invoice and credit or debit note. At this point, a QR code is required for everything, so not just for simplified invoices. Tamper proofing gets even more tamper proof, for want of a better phrase. You'll need a counter in there that cannot be reset for your e-invoices. Your system will need to alert you to any attempted tampering as well. So again, some more security controls to be considered, and even then, for your simplified invoices, you'll need to generate your own cryptographic stamp and have cryptographic abilities, because when you send this invoice to ZACA for them to verify it, they will apply, as long as your invoice is compliant, they will apply their own cryptographic stamp, which will then be seen again by them when your customer feeds it back through their system to verify that it's a valid invoice and they can use it for their input tax recovery. And then there are other requirements such as encryption and hashing that, again, your system is going to have to deal with. Now, I think given the technology stuff that we've just gone into, it's a really good time to hand over to our technology expert and IT consulting practice leader, Shrikant. Shrikant, do you maybe just want to elaborate on really what this means for businesses, both in the context of 4th of December and January 23?
Thanks, George. Good morning, everyone. The most important thing, as you rightly said, is the January 2023 deadline. Right? The initial deadline of 4th of December is a very light impact because it only looks at generation of invoices, and anyone with potentially an ERP system should ideally be able to get into that quite easily, right? With a few changes to the system, of course. Right? But when you look at January 2023, we're looking at, as you said, a real-time system speaking to the ZATCA's tax clearing system, if you want to call that word. Right? It speaks about a PKI infrastructure, a full-fledged certification authority, along with digital certifications and private keys, public keys, the encryption on every invoice, including the hash, which is basically, again, algorithm-based generated security code. It speaks about embedding the XML data. The XML data, as a lot of us may be aware, is basically a string of information which will make it easier for the ZATCA system to, without manual intervention, read the invoice. So whatever is on the invoice needs to be in a particular format. The format will be very specific. It will be issued as a schema by ZATCA once their system is ready to accept it. Any differences between the two will then result in a rejection of the invoice. Right? Plus, it will allow ZATCA to do a lot of validations. Some simple things like the percentage of VAT that has been applied to, whether the VAT numbers that you've put in are correct, your number, the number of your customer. So all that can then be automated. And I would like to say instantaneously, but then in a very quick response time of acceptance or rejection. The system has to be then able to handle that exception. If the system, if ZATCA accepts the invoice, goes to the customer, if it gets rejected, they will send you a reason for rejection. Managing that needs to be also built into the system. And there are certain very specific expectations that the regulation sets. The system should be online connected to the internet, which means it brings along with it all the security requirements. Like George mentioned, the invoice has to be tamper-proof. Right? Almost points towards blockchain technology, where once you've issued an invoice, you can't change it. If you want to change anything in it, you need to issue a credit or a debit note as applicable. So the history of the invoices has to be almost sacrosanct. It should not be editable, modifiable. So when you look at the January 23 ask by ZATCA, is where I think a lot of effort will have to be put in. And while as you rightly said, some people might believe that they can wait till the December 4 deadline first and then start thinking about it, it might actually be counterproductive to do that. Because what generates the invoice should be able to interface and send the invoice forward. So ideally, recommendation is that we look at it as a single project with multiple milestones. The second phase will probably require something in addition to what most organizations have, because from what I see of the product growth paths of most of these standard tier 1, tier 2 ERPs, I don't see e-invoicing figuring in any of those. So potentially people who are using standard ERP systems might tide through phase 1, but when it comes to phase 2, they will face a challenge because the system inherently will not support all these features. So there will be an external additional tool or an intermediary system that will be required to convert from what you have into what ZATCA will require and backward as well. that's what I have right now. And of course, anything else we can answer during the question and answer session.
Thanks, Shrikant. Some really good points there. I think, from both a tax and systems perspective, you're right. I mean, it really needs to be approached as one large project with certain milestones, one of which being the 4th of December. I mean, I noticed in the Q&A, just to take a live example, one of the attendees asked, if I'm ready to generate the 4 invoices by the 4th of December, then what's the difference between that and 2023? I think there's a great point to be made, which is there's so much of this that you could actually start to do today, so that when you come to the 4th of December, you're ready to generate your e-invoices, but it's plus. You have certain things in your system. You can put in tamper resistant counters, flagging for any tampering that's happened. There are other things that you can do. And again, Shrikant can support with this. There are other things that you can do in advance of that deadline, so that it eases your journey up to the end of 2022. So I think that's a really important point, because I know what it's like, in the region, having gone through VAT implementation and things being done within a very limited time frame. Taxpayers quite rightly say, what do I need to do just to make sure that I don't get a penalty and I don't fall foul of this, or I meet my obligations? This is a bit of an interesting initiative in that there's a lot of overlap. And I think, for businesses, obviously, the global economy and economic situation is such that it's not been a good time for a lot of businesses. And the risk here is that if you focus on 2 deadlines, you do end up doing a lot of the work twice, which then becomes, inefficient for cost, for example. So I think we've talked a lot about how this is going to impact business process, but it could be a very good thing. Aside from the pain in generating automated e-invoices, when you start to receive these as customer, and you look at it from the perspective of your input tax claim, it really could ease matters, as long as your supplier on the other side is getting it right. And I do think there's room for communication with your suppliers. As an advisor in KSA for the last 5 years, I on VAT, I've seen so many instances where, the question that comes up is, how can I claim this input tax, or what do I do because my supplier isn't giving me a compliant invoice? And this goes some way to solving that issue with, uniform documentation. You should know what it looks like. Your system should be able to deal with it, because there is more uniformity or complete uniformity in some areas, and that should help you from an input tax recovery AP perspective in getting your claim through. It may also speed up the timing at which you get your input tax recovery, because if invoices are arriving late in the month, they're not being provided to you with enough time to verify and put into your VAT return, and then they're falling into later periods, then this may also help with the speed of recovery and therefore cash flow. So there are some upsides to this, with minimization of verification of your input tax recovery, which may also, aside from the fact that there is a huge risk in sending tax data that's not ready to be sent to the ZACA, this should be helpful from an input tax recovery audit perspective, because these invoices, when you receive them, will already have been one time through the Gazette system. And so I think, aside from the reduction in potentially tax mistake or tax evasion and fraud, there are a lot of upsides to e-invoicing on how it will positively impact business processes, and the fact that the verification from ZACA is like getting real-time feedback. It's like being told consistently, yes, you're right, yes, you're right, no, you're wrong, okay, how do we fix it? And I think that must be a good thing for businesses, particularly with the amount of audit activity that I do see in the market and requests for information. So I think we're running quite nicely on time here. because I do see questions popping up on the Q&A bar on the screen, which is great. And I knew that would be the case given the extent of this initiative. But if we just cover briefly what businesses should do now, and then I'll open the floor to questions, and Tariq can select some of the interesting ones to share with the attendees. Really at the moment, you know, it's kind of like going back to VAT implementation, where the impact of that was assessed as a first step. Now, everyone's e-invoicing journey is going to be different. You know, some businesses have quite an automated process at the moment. I've seen, you know, comments on the Q&A to say, we think we've got it in hand from an IT perspective. There are lots of solid, skilled IT teams that actually, yes, can help you do this. But there are other ends of the spectrum where businesses may be generating manually in Excel, PDFing things, and then there's a mixture between the two. So everyone's e-invoicing journey is going to be different. So there's no room really for a one-size-fits-all approach to how to deal with this. So the first step is really to understand what your process, what your systems look like today, what your tax data look like today. You can only do that by assessing, by performing a gap analysis between what the end state needs to look like and where you are just now, and then build a roadmap towards implementation. And that's what we are advising our clients to do: conduct that gap assessment, look at the requirements, and build the roadmap, and supporting them in doing so. So assessing data quality, making sure that it's complete, it's accurate, it's correct, it's collected in the correct manner, stored, to make sure that your data is as good as it can be, because as we've said consistently through this webinar, it is going to go to Gaza to Zakka at some point. And then hand in hand with that comes the review of the tax logic. If you're applying incorrect treatments today, or treatments that you're not sure about, they've sat under the radar for a while, it's a really good time to review those to make sure that you're applying VAT correctly, particularly on things like the zero rating of services. Zakka is all over that at the moment, and has been issuing large assessments to taxpayers, and there's a lot of litigation around it. So anything where you're not sure, really this is a great time to be reviewing that. But also your processes, controls from a tax and IT perspective, because obviously this is very, very IT heavy, and the same assessment that needs to be done on data capability, let's put it that way, also needs to be done on IT and systems architecture to see exactly what they're capable of, and build out the business requirements from that point. Now, that's going to bring taxpayers to one of four conclusions. Either I can do it internally, in-house, in my own system, or option two, I get someone else to come in and amend my own system. Option three, I use an external solution that may be a bolt-on, it may be something that sits aside from your system that generates your e-invoices for you, or indeed, some taxpayers are considering a completely outsourced model where they send the data and someone else generates the e-invoices for them. So all of those four possibilities may come to pass, but you'll only know what fits you best when you conduct that impact assessment. And then, once you've done that, you can build your roadmap towards implementation that, as I said, will look differently to everyone else's. But just before I close and open the floor to questions in the last 15 minutes, I would advise anyone, and Shrikant is on board with this as well, as is the rest of our business, consider both the 4th of December 2021 and 1st of January 2023 when you are starting work on this, because if you don't, there is a risk that you do the work twice, but also you give yourself a very truncated time to do a lot of heavy IT and tax data lifting. So we will share these slides with the attendees. These contact details are the senior members of our team. You can see Shrikant, Tariq and I on there, but also other members of our team who are based across KSA and Bahrain and who work in the KSA market. So we do have a footprint both sides of the border and can support you. But thank you very much for listening this morning. I hope it's been informative. I appreciate that you're all at different stages with your e-invoicing journeys. I would welcome the chance, as would the other team members, to talk with any of you to see how we may support you. And good luck. Thank you once again. Tariq, do you want to perhaps select some of the interesting, I mean, they're all interesting, but maybe some of the most applicable questions, and we can see whether you, Shrikant, or I answer them?
Yeah, I'll do that, George. Thanks for that. So there's lots of questions. Some are really, really difficult. So we may need to spend some time thinking about those questions, but we'll try and get through as many as we can. The first question is around, is it okay to issue invoices manually? I'll answer that. I guess the answer is no to that. If it meets the e-invoicing requirement, it must be an e-invoice. You cannot do it outside of the invoicing system. And there's a question around, Shrikant, you can take this one. The question is, when we say e-invoicing generation for December 4th, 2021, do we mean issuing invoices from ERP systems, or do we mean something additional?
The ERP system should be able to take care of your generating invoices for 4th of December. There are certain additional requirements that have to be taken care of, right? So the initial understanding is, yes, most of the ERP system will be able to take care of it. Things like unique ID, tamper proofing, prohibition. There are certain prohibited activities that cannot be done, things like that, which the initial readers, most systems will be able to do. But we will, again, in a gap assessment, need to look at, whether it ticks all the boxes. Because what Zatka has been very clear is they have created a list of prohibitions, and none of those should be possible, in addition to what should be possible, right? So manual invoices, as Tariq said, absolutely no, right? But you'll need to make sure that all the boxes are ticked. If yes, then ERP system should be able to issue your generation phase.
Great, thanks for that, Shrikant. Shrikant, just another one for you. Just a quick explanation on the tamper-resistant counter again. Can you give a sort of very brief overview on that?
Right. Okay. There are actually two things, right? One is being tamper-resistant, and second, having a unique counter or unique ID. The requirement is that the digital invoices or e-invoices should be tamper-resistant, which means once you've issued the invoice, there should be no ability to change content in the invoice. Now, when I say no ability to change content in the invoice, it applies to the companies as well. So today, for example, again, this is where the ERPs kind of come into a clash, right? Today, you have an issued invoice and the customer requests a change. Can you modify an item in the invoice and issue a new invoice with the same number, same date, same sequence? Right? The new requirement is it cannot be done that way. So that has to be tamper resistant. So once you've issued an invoice, it's cast in stone. Any changes, a debit note or a credit note has to be separately applied. If the entire invoice is wrong, you have to cancel the entire invoice through a debit or credit note, and then reissue it as fresh. So that is what they mean by tamper proofing. The second thing about the counter is the sequence. So to be able to balance the tamper proofing requirement, each invoice should be a unique sequence. So if you're running multiple sequences of invoices, that will not be acceptable. You will need to, for Zatka purposes, have a single unique sequence of invoices, which will then again have to be, auto-generated. It's not a manually generated sequence.
Great, thanks for that, Shrikant. George, one for you. Can we get our current e-invoices validated by Gazette? So that's called Zatka, like a approval system. I think there's been another person asking the same question. Will there be a need to certify IT systems for phase one, or is it left to organizations' discretion?
Yeah, so the answers on solution, and again, this has actually come up in Q&A for Zatka in Zatka sessions. Is there a specific solution that you require? Do you approve solutions providers? And the Zatka has been very clear in saying that there's no approved list of providers. There's no vetting really that can be done. Certainly not by Zatka, but it can be done by solutions providers. The thing that they stipulate very clearly is that you must be able to meet these deadlines. You must be able to generate e-invoices in a free format by the 4th of December 2021. And you must by 2023 be able to generate in XML. And when we select you, send, integrate with our system and clear those invoices with us in real time. That will flow through through Zatka's API, verify whether your invoice meets all the requirements, and come back to you with a cryptographic stamp if it is indeed a valid invoice. So that I guess it's one of these situations, Tariq, where the proof of the pudding is going to be in the eating. It's really only going to be verified when you send that first XML invoice to Zatka. And I think I didn't mention, but it's an important point. Zatka will select groups of taxpayers to onboard for the integration phase, but like has happened in Egypt just very recently, those will be large groups. I would expect, just with the way the phrasing has gone, that they will select a cross section of the economy to get used to onboarding all different types of businesses. So I would, anyone could effectively be selected. All they have said is they'll give you 6 months notice, so they'll start to issue notice from the 1st of July 2022, and that's when the heat will really turn up for some people. But it's a real guessing game at the moment as to who's going to be selected. But just then to circle back to the answer to that question, Tariq, the vetting of this, the stamp, the approval is only going to be when the integration is live and businesses are sending invoices to Zatka in real time.
Great, thanks for that.
Can I also add?
Go ahead.
Looking at how internationally tax or other authorities have gone through these kind of integrations, they normally provide a sandbox, right? So when the Zatka system is ready, they would ideally, again, I'm speaking ideal rather than Zatka specific, provide a sandbox where companies which are trying to integrate can test the interface. Because at the end of the day, for obvious reasons, like I said, if the interface is incorrect, the system will reject invoices and it'll keep rejecting it. And unless they give you a reason why, you can never fix it. So traditionally, the authorities have always given a sandbox to test the interface. As of now, whether Zatka will do that, I don't know. I don't have an answer on that question yet. But my hope and expectation is that there will be some amount of UAT space stroke a sandbox given to us for the second phase. For the first phase, because there is no integration requirement, there's nothing from Zatka, we will not have any approvals or any sandbox or any UAT to test.
Great, thanks for that, Shrikant. I'm conscious we've got about 4 or 5 minutes left and there's still 18 questions open. We'll try and get through as many as we can. If we're not able to get through all of them, which is the likely outcome, we'll send across the answers or responses to the questions. Anyway, so I'll just take a quick question here. It says we are using an Oracle ERP software. How do we know that our system is in compliance with the requirements? Well, we've touched a bit on that. And either internally, you'll have to check whether the requirements are met. If you're not comfortable from the tax and IT side, I definitely recommend you get someone external to double check that all the requirements are met, because from the 4th of December, implementation will be expected and there won't be an option of doing things outside the system if things are not working as they should. Okay, that's that one done. There's a question about how out of scope supplies will be coming under e-invoicing as the goods don't enter KSA customs border, especially under Zatka system. George?
Yeah, sure. So we go back to what is covered by the by e-invoicing, as assume you're a KSA resident taxable person, so otherwise covered. But you'll see that e-invoicing only covers taxable supplies and certain other things. It does not cover things which are out with the scope of VAT. So the e-invoicing regulations do not apply. You are not required in respect of out of scope supplies to meet the requirements of e-invoicing.
Great. There's a question around how RCM's to be taken care of. So RCM is not subject to e-invoicing. That doesn't come under the remit.
Yeah, so it should just be dealt with in the way that the accounting or the system currently deals with the RCM, but you won't be required, just as you aren't today, to issue a tax invoice for it. You won't be required to issue an e-invoice.
Yeah. And someone's asking, what do you mean by approving the invoices through the ZACA system?
Yeah, so again, it's that is the most difficult part of e-invoicing. And so ZACA will effectively, your system, once it's up and running and you've been selected, will need to integrate in real time with ZACA system. It will effectively need to talk to the tax authority system, and that conversation will be two-way. It will be you sending your XML invoice with your unique identifier, the QR code, all of the hashing, which will be generated by an algorithm, by your system to ZACA system, and that system will review it and either tell you that it's been rejected, or send it back to you having applied ZACA's cryptographic stamp. So you will then have an XML invoice with everything else on it and a cryptographic stamp to issue to your customer system, and your customer system will pick that up. And then they will have to, because their system will need to integrate, that system will have to send it back to ZACA. ZACA's system will say, we recognize this invoice and the cryptographic stamp and the QR code, and approve it back to your customer. So there are two flows in and out of ZACA for one invoice effectively. I hope that answers the question. It is the most complex aspect of e-invoicing.
Great. I think that's as many, probably as we can answer today, George. I think we've got about 16 left to go. They're still coming in. So I think we'll have to take them offline and respond to them separately.
That's fine.
By email.
We will give a response to those. So just to close the session, as we've now reached 11 o'clock, thank you all so much for taking the time. Really appreciate your attendance today. We will circulate the presentation materials as well as answers to the Q&A. I think those have been fantastic, and they really give an insight into the burning questions of businesses. So thank you all very much, and wish you all a fantastic day. Speak soon. Thank you. Bye.